Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDI.
Half of the case, processing and launch.
At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nest to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hoksoon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hoksoon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hoksoon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hoksoon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled, every risk is managed, every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with
Good afternoon, investors. You are now on KleverStock with me, Madhavi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, caution swept through Bursa Malaysia during early trading, echoing broader international market anxieties as skyrocketing crude oil prices and retreat in U.S. technology stocks unsettled market participants. The benchmark FTSE Bursa Malaysia KLCI managed a mild gain of 3.01 points to open at 1,714.38. However, trading activity remained hesitant as investors paused following three consecutive sessions of market losses. Global market sentiment was destabilized overnight as Brent crude futures for September delivery breached $95 per barrel, driven by escalating geopolitical friction in the Middle East. The sharp rise in energy costs has reignited fears of renewed inflationary pressures ahead of the Federal Reserve's upcoming policy meeting. Concurrently, US tech heavyweights face selling pressure, highlighted by the Alphabet's post-earnings drop after the company signaled increased capital expenditure plans. Analyzing the market backdrop, APAC Securities noted markets are punishing capex expansion rather than rewarding growth, keeping the AI spending debate opening to the remaining mega-cap reports after the next week's Fed meeting. In light of these macroeconomic headwinds, the research house urged investors to exercise patience before taking on new exposure, suggesting a temporary preference for the energy-linked and domestically focused equities while energy supply risk and tech expenditure debates play out. From a technical perspective, APAC Securities highlighted that the local benchmark continues to navigate a constructive consolidation phase after bouncing back from the 1660 to 1670 zone. The index currently holds above its 20 to 120 and 200-day moving averages, preserving its long-term positive trajectory. Detailing key charting threshold, the brokerage added, near term the index faces resistance around 1720 to 1740, where the descending trend line and recent swing high coverage. A decisive breakout there would likely open the way back towards 170, 1760 to 1770. Conversely, the firm identified initial support and the 1700 to 1680 range, with secondary report at 1625 should buying momentum falter. Individual stock movements reflect the surge in energy markets. Petronas Chemicals advanced 10 cent to 4 ringgit 82 cent, while Petronas Dagangan lifted 18 cent to 19 ringgit 52 cent. Consumer heavyweight PPB Group also moved higher, adding 7 cent to reach 9 ringgit 47 cent. Among actively traded shares, Amax held steady at 1.5 cent, while Zetrix AI slipped 1.5 cent to 70 cent, and VS Industry eased 0.5 cent to close early morning action at 25.5 cent. Moving on to our local currency and foreign exchange. The ringgit traded slightly lower against the US dollar during early morning transactions, moving in line with broader foreign exchange trends as ongoing geopolitical friction in the West Asia raised concerns over global energy supply disruptions. At 8 a.m., the local note weakened to 4.0855 or 4.0920 against the greenback, down from 4.0850 or 4.0890 at the previous day's close. Commenting on the shift, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Abzal Nizam Abdul Rashid noted that investors are monitoring how current geopolitical tensions translates into broader inflation readiness, which will heavily weigh on upcoming U.S. Federal Open Market Committee rate decision. He explained the odds for a September hike have risen to 64.8% compared to 51.5% in early July. Hence, it is going to be dollar positive in the near term. Offering a broader view, SBI Asset Management Managing Partner Stefan Innes highlighted that despite a firming US dollar environment, the ringgit has shown noticeable stability throughout the week. He attributed this performance to a dispersion trade setup across foreign exchange markets rather than a uniform move toward a greenback. Innes pointed out the local currency has been supported by Malaysia's improving terms of trade after the latest strong trade data, while its status as an energy exporter has also offered some relative protection as oil prices rise. Across the wider currency basket, the ringgit posted mixed to a slightly softer result. The local note appreciated against the Japanese yen to 2.5051 or 2.5092 from 2.5057 or 2.5081, while easing against both the euro to 4.6624 or 4.6698 from 4.6585 or 4.6631, and the British pound to 5.468 or 5.4735 from 5.4612 or 5.4666. Performance against ASEAN currencies remained mixed as well. The ringgit slipped against the Singapore dollar to 3.1646 or 3.1699 from 3.1635 or 3.1668 and edged down versus the Thai baht to 12.0924 or 12.1173 from 12.0787 or 12.0944. Meanwhile, it held steady against the Indonesian rupiah at 228.0 or 228.4 and stayed unchanged against the Philippine peso at 6.61 or 6.63. And now for some economic news. Bank Negara Malaysia reported a minor reduction in its international reserves, which totaled $131.8 billion as of July 15, down from $132.6 billion recorded at the end of June. At countries, international reserves serve as a critical financial safety net designed to absorb sudden macroeconomic shocks, manage exchange rate volatility, and facilitate international trade payments. Slight movements over a fortnight are standard financial occurrences, typically reflecting routine valuation adjustments, foreign debt repayments, or routine central bank operations to manage local liquidity. Despite the $800 million dip, the central bank reassured markets that the existing reserve buffers remain strong enough to support the nation's short-term external obligations and trade needs. In its official update, BNM highlighted that the reserves position is sufficient to finance 4.7 months of imports and goods and services and is 0.99 times of total short-term external debt, because international financial standards generally consider 3 months of import coverage as a safe benchmark. Malaysia's current standing of 4.7 months indicates a healthy cushion to continue paying for critical foreign goods and services should external report income temporarily dry up. While a ratio above 1.0 is a common threshold for idle reserve adequacy, at 0.9 times coverage remains stable for Malaysia. This stability stems from the fact that a large portion of short-term external debt consists of routine intercompany loans and trade financing within global banking networks, which are typically rolled over the standard business operations rather than suddenly liquidated. The composition of Malaysia's reserve portfolio remains highly diversified to ensure liquidity, safety, and steady yields across different market conditions. Foreign currency assets continue to make up the overwhelming majority of the stockpile at $116.4 billion, providing immediate liquidity for daily market stability. The remaining balance is allocated across special drawing rights at $6 billion, physical gold holdings valued at $5.8 billion, other liquid reserves assets at $2.3 billion, and an international monetary fund reserve positions worth $1.3 billion. And we'll now take a short break, but don't go away. We will return shortly with corporate news and developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Shares of IGB commercial rate recorded a notable uptick on Thursday after the real estate investment trust delivered stronger than expected operational results for its office assets during the second quarter. Optimism surrounding the rate remains firm among market observers. Research House anticipated that the commercial trust will remain its upward momentum over the remaining months of 2026, supported by climbing occupancy rates and favorable rental revisions across its commercial portfolio. According to Hong Leong Investment Bank, the trust continues to stand out as a key beneficiary of the corporate flight to quality trend. This structural shift sees business tenants increasingly prioritizing prime transit-oriented office spaces equipped with updated environmental, social, and governance standards. Rebuffing broader market volatility, unit prices for IGB commercial rate advanced by as much as 2.5 cent or over than 4%, reaching 63 cent in early trading, nearing its historical peak of 63.5 cent. Trading volume was brisk with more than 1 million units changing hands, lifting the trust's market capitalization to 1.5 billion ringgit. The trust, which manages a portfolio of 10 prime commercial offices properties including Manara South Point within Mid-Valley City, has recovered steadily from April low points caused by West Asia geopolitical turbulence. Year to date, the stock has gained approximately 4%. Analysts maintain a unanimous consensus, with all three research firms covering the stock reiterating buy recommendations and raising the average 12-month target price to 76 cents. Echoing this positive sentiment, Malacca Securities pointed out that the trust holds ample room for continued positive rental reversions, referring to the increase in the rent negotiated upon lease renewals. The firm attributed this potential to ongoing asset enhancement initiatives and persistent tenant demand for prime business addresses. Malacca Securities noted that the current valuation offers an attractive entry point for investors, citing compelling projected dividend yields ranging between 8.4% and 9.3% through the 2026 to 2028 period. Up next, we have banking updates. Malaysia has raised grave concerns regarding threats by the Houthi movement to restrict global maritime traffic through a Bab el-Mandeb Strait, warning that any operational interference would severely compromise global energy security and supply chain stability. In an official statement released on Tuesday, the Ministry of Foreign Affairs emphasized that the strategic waterway serves as a critical international trade artery bridging ASEAN and the European markets. Wisma Putra highlighted that the transit disruptions in the corridor would generate widespread economic ramifications well beyond the immediate Middle Eastern region. Underscoring the national interest, the ministry stated, as a trading nation whose economic vitality and the national prosperity rely heavily on open, safe, and unhindered international maritime commerce. Malaysia reiterates that any disruptions to vital global shipping choke points poses a direct and unacceptable threat to the stability of international supply chains, energy security, and global economic recovery. The ministry urged all international actors to respect freedom of navigation and safeguard commercial maritime routes in accordance with established international legal frameworks, particularly the 1982 United Nations Conventions on the Law of the Sea. This stressing and the long-term stability hinges on diplomatic engagement and adherence to the international law. Wisma Putra confirmed it will continuously monitor regional security developments via its diplomatic network, while advising Malaysian flagged ships and maritime operators to maintain heightened vigilance and adhere strictly to updated security advices. Shipping analysts and industry reports indicate that a complete closure of the Bab el-Mandeb Strait could remove approximately 7% of global oil supplies from active circulation by stranding key Saudi energy exports, compounding existing maritime shipping losses caused by regional conflict. Finally, wrapping up, we have major corporate developments and the deals across Malaysia. Maxix Berhad has signed an initial pact with the firm controlled by the Pahang royal family for fibre and mobile connectivity in the Kota Sultan Ahmad Shah township. Valesto Energy Berhad has secured a contract worth above $51.0 million from Hess Exploration and Production Malaysia BV, a unit of Chevron Malaysia, for the integrated rig dealing and the completion services in the North Malay Basin. AME Elite Consortium Berhad and KLK Land Sdn Berhad have unveiled their joint venture 151.2-acre industrial park development named iPark Coalfields in Sungai Buloh, Selangor, that has a gross development value of 1.3 billion ringgit. Orchid Berhad has entered into a memorandum of agreement with the Hong Kong-registered shipping company All Continents International Shipping Limited to acquire an oil and the chemical tanker MT Rong Yo Vuzo for 457 million yuan. JDBA Holdings Berhad has secured 39.4 million ringgit contract to construct the Wallow Hotel and Residence Mount Kiara KL project in Kuala Lumpur from Magma Group Berhad. My News Holdings Berhad has entered into a sale and purchase agreement with the Tung Heng Metal Industries Sdn Berhad to acquire 13.5 acres industrial land in Rawang for 24.7 million ringgit to build a new distributor centre. OCR Group Berhad has entered into a conditional share sale agreement to acquire a 49% stake in Shasta Properties Sdn Berhad from Dato Howard Chew Se Ho from 19.6 million ringgit. Preserve Resources and Berhad plans to acquire 3 semi-detached factory units at Surunda Technology Park in Rawang, North Selangor, for a total of 15.4 million ringgit as the steel products manufacturer expands its industrial footprint. And that's a wrap for Media Roundup with me, Madhvi, on KleverStock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs.